market conditions bearish and continuing to deteriorate. This trend condition now sitting at majority bearish at 10 and 4 on S&P 500. We've got majority bearish at 14 on the 1 hour time frame. We have pressed back down into a demand block, and these are areas where we could see a potential oversold rally and an area where we may see some buying interest come back in. The only problem with that is we're seeing, we're just seeing this trend continuing to weaken across the board. We're seeing internals on the breadth of the market also weakening yesterday. Pretty big down day, back to 46% on internal breadth. That is the number of stocks above the 50-day moving average is at 46%. Majority bearish on that trend, and you can see it's starting to compress and consolidate, which means that it's going to start expanding one direction or the other. When we get these compressed states, we're either going to continue to expand this direction, or we're going to start to move and head back up this direction. And the current trend pattern sitting right here is looking more bearish than it is bullish for S&P 500. We're also seeing volatility starting to climb or continuing to climb here up to 24 on VIX. On the daily time frame, majority bullish at 14, and the 1 hour time frame definitely extended now, and again extended volatility to the upside, potential extended price activity to the downside on S&P 500. We are seeing futures starting or continuing to weaken now, pushing the downside of that supply block and right at some significant support areas. If I just move this over just a little bit, we'll see where that retracement, we're approaching the 382, that counter trend corrective retracement zone, but it's just underneath this price activity here. So the more areas of the zones that we break through, it just creates more resistance, and harder and harder for bulls to take control in this environment. And if we jump over and take a look at bonds, we're seeing a rally still continuing in bonds. SHY, the short end of the yield curve, which is the 1 to 3 year range, continuing to move higher, majority bullish. We're seeing TLT, which is the long end of the yield curve, the longer bonds, also majority bullish, and working its way back up into a potential bullish trend. As you can see, the expansion of the downtrend just been gradually working its way back this direction, and could start to be to find some footing right here. That's corresponding obviously with rates that are going down. This is the 2-year note, majority bearish. You can see just this last 5, 6, 7 sessions really selling off hard, and the 10-year also doing the same, back to 414. So from 480 to 414, continuing to move to the downside, majority bearish on rates. So again, that issue is dealing with rates now. Is the Fed going to have to cut based on recession or slowing or risk? Now we've got the tariff scenario. Markets are trying to weigh in on all of these different scenarios currently, and they're not liking what they see. Dow Jones Industrial Average, majority bearish at 9 and 5. Holding up a little bit, stronger than S&P 500. Triple Qs, NASDAQ 100, majority bearish at 12 and 2, 14 on the 1 hour time frame, and it's getting closer to breaking down this price point and sitting right at that 382. That 382 is that first corrective zone where there could be price demand starting to come back in at that 382. If that doesn't hold, 50% is the next stop. If that doesn't hold, 618 is the next stop. Typically, we do see some kind of price activity around there, maybe a bounce back up again. So any rallies that we're seeing need to be a little bit suspect right here in terms of buying into aggressively. And the Russell 2000, let me grab this right here. Russell 2000, those small cap stocks, which have been weak most of the year, going all the way back to November, is really when they topped out. Now they're accelerating to the downside. Again, that is a risk-off trade when you have small caps leading the charge to the downside. That means institutions are selling the riskiest stocks, which they may consider small caps the riskiest stocks, and that is leading the charge to the downside. USO, we talked about USO. It's majority bearish. Tried to make a breakout and still may do so, but each day it's dropping down below those levels, and so now we're sitting at 73, the 618 retracement of that bullish trend from here to here, and then working our way back 50%. A halfway retracement is here, 61. 62% retracement essentially is here, and we're testing that level. Once we break through that, there's a high probability that the trend is now down or continuing to be down, and USO not finding the strength here in the most recent sessions. Gold, on the other hand, having a bit of a retracement, some consolidation, starting to move back up. You can see pre-market we're at gapping back up to 269 on GLD. So a little bit of a pause right here on gold. Still extended in this uptrend, but these retracements are potential buy the dip scenarios on gold at these levels. SLV, similar price pattern as well. A couple stock ideas to consider. TGTX, a big confirmation bar here, increased volume back into the momentum zone, and one other stock to consider, SNEX, at these levels. Big volume, holding up nicely in these upper levels. Nothing really, not a real big solid confirmation bar, but still structurally looking sound in these market conditions. Maybe some interest in that name as well. That'll do it for today's update. Everyone have a fantastic day today.